the assets that will lose the most value in 2025. If I told you today that in 2025, there will be 5 types of assets that will drop sharply in value and lose a lot, what would you think? Most people would probably want to know what these assets are and check if they own them. If they don't own them, they might think this doesn't concern them. And for those who don't own any assets, it clearly wouldn't affect them, right? I laugh because it seems like you're thinking that you can only make money when asset prices go up. But when asset prices go down, you can't make money. But the reality is different. Welcome to Path to Wealth. I don't understand why many people think they can only make money when asset prices go up. Can't you make money when assets lose value? Let's imagine that a house in the city used to be worth $1 million, but in 2020, it's only worth $500,000. You might think this is unreasonable and impossible, but let me tell you a story. In 2011, many Japanese people moved to the U.S. after a few years of renting houses in the USA. They realized the country wasn't right for them and wanted to return to Japan in 2025. When they returned, they found that the value of their assets had at least doubled. Why? Because when they moved, they changed their assets from Japanese yen to US dollars, and now the exchange rate between the dollar and yen has actually doubled. For us, this is similar. Whether asset prices go up or down, there is always a way to make money. In fact, Warren Buffett made a lot of money during the financial crisis, and Li Ka-shing became the richest man in Asia when property prices in Hong Kong dropped dramatically, wiping out the assets of many people. So why is that? Because when asset prices go up, it's like climbing a mountain, facing many obstacles. Climbing to the top may take 3 hours, but going down might only take 1 hour, or even just a few minutes if you jump. For example, the Dow Jones Index took 3 years during President Donald Trump's time to rise by 49%. But in 2020, it took only 1 month to drop by 49%. This means if you short sell during that month of decline, you could make the same amount of money in 1 month as it would take to gain over 3 years. In addition, if you knew that a house priced at $1 million would increase to $2 million, this might not be relevant to many people because they can't afford to buy it. But if you knew that the house, which was priced at $1 million, would drop to $500,000 when you could afford to buy it, then buying the house would definitely concern you. When your thinking and perspective change, you will realize that in 2025, whether it's good news or bad news, it can still become an opportunity for us. This is not because we are blindly optimistic, but because when bad news happens and asset prices drop sharply, that's when we have the most opportunities to make money. Whether you accept this or not doesn't matter because you will have to face it. The only choice you can make is to become successful or fail. So today, if you want to have this mindset and career, if you don't want to be a failure in 2025, or even if you hope to use this opportunity to rise through the social classes and become a leader, you can follow my channel. I believe that in the future, I will provide more useful information for you. If you're worried that after watching this video, you won't take action, then just like the video. By doing so, the video will automatically be saved in your playlist, so you can watch it and take action anytime. First, we need to open our third eye so that we can see what will happen this year. The method is very simple. You need to follow my thinking, using your mind to track the flow of money, where the money comes from, and where it will go. In other words, you must understand the rules of the whole system to know what will happen next. As you know, Zimbabwean dollars, even if you have 100 billion Zimbabwean dollars, you still cannot buy a loaf of bread. Do you remember the story about the person who used 10,000 bitcoins to buy a pizza? That's because at that time, Bitcoin was just a type of currency, not a true money. A currency can only become money when it can be exchanged for things you want, and those things are widely desired by others. For example, the US dollar can be printed endlessly to buy goods all over the world. The U.S. simply uses dollars to buy goods from China. Throughout this process, China provides labor, while the U.S. just prints money. So why does China still want US dollars? Simply because the dollar can be exchanged for things China wants, things that the whole world wants. Most importantly, those things are created by the US from nothing. That is, you use government bonds. US bonds are like you lending the US dollars. And the US uses that money to generate profits, then shares a portion of those profits with you. In other words, you invest, and the US, the best money-making country in the world, will make money for you. This may sound very fair. You sell goods to the US, receive dollars, and then use those dollars to invest in the US. This is why the whole world sells goods to the US, holds dollars, and uses dollars to trade with each other. The US dollar can be exchanged for more and more goods. You can use dollars to buy diamonds in Africa, household appliances in Japan, and even in movies. People use boxes of dollars to buy anything. This is the reason why the US keeps printing dollars. But the value of the dollar doesn't drop sharply because the amount of goods the dollar can buy keeps increasing. So if you want to make a currency lose its value, there are two ways. First, print too much money. Second, reduce the amount of goods this currency can buy or make people no longer want those goods. Have you noticed that right now? U.S. government bonds with a face value of $100 on the primary market are only being sold for just over $90, and they still offer a 5% interest rate? What does this mean? In the past, when you lent $100 to the U.S., you only received a 2% interest rate because if you didn't lend, the whole world was still ready to lend. But now, if you lend me $100, I'll pay you a 5% interest rate. And you don't even need to lend me the full $100. Just $93 will do. I'll still calculate the 5% interest based on $100. What does this mean? Ladies and gentlemen, the first asset to lose value in 2025 will be U.S. government bonds. Last year, when I told this to my friends, many didn't believe it because at that time, the Federal Reserve Fed was still raising interest rates. When the interest rate on U.S. bonds was at 5%, many people thought that when the Fed reduced interest rates, this level of interest would disappear. So they rushed to buy bonds to lock in this interest rate. As a result, bond prices increased slightly. However, after the Fed did reduce interest rates, the interest rate on U.S. bonds didn't decrease accordingly. Why? Because U.S. government bonds couldn't be sold. You'll realize that countries that used to lend the most to the U.S., like Japan, China, and the U.K., have reduced the amount of U.S. bonds they hold. This means these countries no longer want to hold U.S. bonds, but prefer holding cash. This is national policy, and national policies are not easy to change. So, when no one wants to lend money to the U.S. has to raise interest rates and lower the price of bonds to attract buyers. Can you think of why these countries are all reducing their holdings of U.S. bonds? The reason is simple. When I buy U.S. bonds, it means I'm investing in the U.S., but the U.S. uses that investment to pay private companies, which can't pay their debts, and even have to borrow new debt to pay off old debts, or print more money to cover those debts. Let's think about this. U.S. bond prices are falling, but the interest rates are rising. This means that the price of many other assets, especially those that give fixed returns, will also drop. For example, if I buy U.S. bonds, I will get a 5% return in just 3 months with no risk, and I only need to pay $93 for a $100 bond. So why would I invest in assets with only 3% or 4% returns? This leads to a situation where the price of assets that depend on interest rates, like stocks, will have to drop. For example, a stock priced at $100, paying $3 in dividends, would give a 3% return. But now, with a 5% bond interest rate, in order for this stock to be as attractive as bonds, it needs to pay at least 5% in dividends. So the stock price must drop from $100 to $60 so that the $3 dividend equals a 5% return. This means that assets that give fixed income, like dividend-paying stocks, will lose value. Only when the price drops will the return increase. And only then will these assets attract investors instead of them buying used bonds. Therefore, in 2025, the second type of asset to lose value will be those that provide fixed income, like dividend-paying stocks. Many people buy stocks to receive long-term passive income, but this year, the price of these stocks may continue to fall, while the returns will increase. Additionally, the price of commercial real estate in the USA will also face more severe issues. Previously, when the pandemic occurred, people switched to remote work and their consumer habits changed. People started shopping online, so you will notice that in the US, large offices and stores are harder to rent. This leads to a sharp drop in both the sales price and rental prices of commercial real estate in the USA. This could become a ticking time bomb for the next financial crisis. Those who buy commercial real estate are usually large investors, not small traders. Most commercial real estate owners borrow money from banks. Now, with no one renting or buying these properties, many owners in the U.S. have lost their ability to pay the debt, which leads to them refusing to pay the loans. As a result, these properties will be transferred to the banks. At the same time, the asset that banks hold the most is U.S. government bonds. So, what happens when both commercial real estate and bonds lose value? This is why Warren Buffett sold shares in U.S. banks that he owned. But what I want to emphasize here is, do you know where the money is going right now? Pay attention to this detail. In the past, I used U.S. dollars to buy goods from China, and then China used those dollars to buy U.S. government bonds. The result is that the money eventually comes back to the U.S. government. But now, U.S. government bonds are not selling, which creates a problem. There is currency, but no goods to match it. This is like the story I mentioned earlier. When you have money but cannot buy anything with it, it becomes meaningless. The problem here is, where is the money going? In the past, the commodity the U.S. sold you was bonds, and the money eventually returned to the U.S. government. But now, the commodity the U.S. is selling you is bonds, and the money is flowing into the pockets of capitalists. Look at people like Warren Buffett, Mark Zuckerberg, or Bill Gates. They are all selling shares. As people say, Warren Buffett currently holds the largest amount of cash in history, but hardly anyone questions how he can hold so much cash. That's because the money has come back to him. If not, how could he have so much cash? What role does the stock market really play? It's to pool money from the majority of people and concentrate it in the hands of a small group of wealthy individuals. The stock market doesn't create wealth. It only redistributes wealth. Right now, the U.S. government is running a $2 trillion deficit every year, meaning they are spending $2 trillion more than they earn. This means the money mostly flows into the hands of capitalists, while the government doesn't have enough money to spend. If a leader comes into power without money to spend, they won't be able to do anything. So what should they do? Maybe they use personal money to save the country. There are only 3 ways. The first way is to increase income, but this is hard to do significantly. The second way is to crash the stock market, causing money to flow back into U.S. government bonds. Right now, people are buying used bonds instead of stocks. The third way is the most direct and also the most commonly used. Print more money and lend it out to spend, which means expanding the balance sheet. In that case, the dollar will lose value. This is the most likely scenario to happen in 2025 because all of Trump's policies require one key condition. The dollar must lose value to stimulate the economy. Recently, he also announced that he will permanently remove the U.S. public debt limit. This means the U.S. can borrow as much money as it wants without any limits. This is a move to expand the balance sheet. If they don't have enough money, they just print more money and borrow to spend. When the money supply increases, the value of the currency decreases. Therefore, the third asset to lose value in 2025 will be the U.S. dollar. What does Trump want to do? Increase import taxes. This means if China wants to sell the U.S. a product worth $100, they may have to pay an extra $20 in import taxes. This will raise the selling price of Chinese goods to cover this tax. As a result, most imported goods will become more expensive. And because the U.S. relies heavily on imports, prices in the country will rise. At first glance, this price increase seems fair because both the rich and poor have to pay higher prices for goods. But is it really fair? Think about this. You eat a steak, and the price of your meal goes up by $20. If your daily income is $100, that meal now costs 20% of your income. But for the rich, if their daily income is $1 million, $20 is nothing. For regular people, purchasing power in 2020 will decrease because they will be able to buy fewer goods. But for the rich, this doesn't affect them much. However, high inflation is still not a good thing. What do you think about the Russia-Ukraine war in 2025? War costs a lot of money. Russia's income mainly comes from selling oil. If oil prices drop, Russia's income will dry up. Therefore, oil exporting countries have announced they will extend their plans to reduce production. This means the oil supply will not decrease further. When Trump takes power, he will push for increased shale oil production in the U.S. This means oil prices will drop. For oil importing countries, costs will be lower, reducing inflation pressure. At the same time, this cuts off Russia's financial resources and creates a negotiating advantage in peace talks. More and more people are switching to electric cars. Even Porsche and Ferrari, traditional sports car brands, are now producing electric cars. As people stop using gasoline, oil prices will continue to drop. The final asset to lose value will be cars. In fact, cars lose value as soon as they leave the showroom. But after 2025, the depreciation rate will increase quickly, especially for cars priced at $100,000. China is currently the largest producer of electric vehicles. Electric vehicle companies there often sell at a loss to dominate the market. Tesla is also lowering the price of new cars. People who bought a Tesla for $50, $60,000 last year will see the price of new cars becoming more affordable. The Tesla you bought earlier is now priced between $30,000 and $40,000. If you bought a Tesla last year, when you sell the old car, will it be worth less than $30,000 or $40,000? This means the car's value has dropped by at least half. This trend shows no signs of stopping. Gasoline cars are the same. People are choosing to buy electric cars to save fuel. Previously, cars like Porsche held their value well, but now they are losing value because they are not selling. In 2025, we will witness a significant decrease in the value of several types of assets, including U.S. government bonds, fixed income assets like dividend-paying stocks, commercial real estate, the U.S. dollar, and cars, especially gasoline-powered vehicles, and even high-value cars like Porsches. However, this depreciation is not an insurmountable challenge. On the contrary, it presents an opportunity for investors with vision and flexible strategies to take advantage of the market. While the decline of these assets may worry many people, if we know how to seize the opportunity, we can profit from these changes, whether by purchasing assets at lower prices or applying smart investment strategies. Instead of worrying about changes, shifting our mindset and embracing opportunities and challenges is the key to success in 2025.